Hey, this is René. Welcome back to another video on this channel. And today I want to talk about a new Martingale strategy that I wrote and that is part of the new Martingale class that I just created and uploaded to our website. So you can see it here already in the background, and we will have a look at this together now in detail. So let me switch or turn off the backtest and let's have a look at this program in detail. So first of all, this is a one direction martingale strategy. So this is not the box trading type of strategy, but instead you increase the lot size in just one direction. But we will have a look at this in a second. Maybe first of all, let's give it another quick run in the strategy tester and see how it works in when we let it run a little bit slower. So you can see here it now the tester now loaded the chart. We trade euro US dollar, but it doesn't really matter. You can trade any symbol you want. And we see two moving averages in the chart. So the idea is really simple. We have this fast moving average, which is a 50-period moving average, but I mean, you can choose whatever average you want. And we have a slow moving average. And you can see that as soon as there is a breakthrough, so the fast moving average jumps above the short period moving average, or the fast period moving average jumps below the slower moving average, then we have a trade in this direction. So for example, here we had the first crossover in this test. So the fast moving average was falling below the slow moving average and we had this short trade. Here we had a different signal. Here it was a buy signal, so we had a long trade. Here we had another short signal. It was a short trade. As you can see, the market overall was coming down in this period, so we were able to close the short trades. For the buy trade is a little bit different because there was not really a lot of profit after the position opening, and this is where the Martingale technique comes into play. So we will see that if we are negative with this position and we see another buy signal, we will open another Martingale position. Now you might ask yourself, why don't we open it here? This is because this was probably not far enough away. Yes, true, because in the settings right now, I use a minimum Martingale points of 1000. So we only see another buy position if it is at least 1000 points below the first buy position. Here we had another sell position, trailing stop is active, and yeah, we still have this buy position, and here you can see now we see another buy signal, and this time it was more than 1000 points below the old buy signal. So here we open another buy position. And the idea of strategies like this, like overall you can say this is a Martingale strategy. The idea is to reduce the average entry price. So we can see up here we had one lot opened and this was not going great, so we wait for the second signal and here we open two lots. So you can see the average price is not in the middle where it could be if both have the same lot size, but instead, and you will see it in the upper left corner here, it is at 1.10737. 1.10737. So the average price of these two positions is somewhere around here. So you see that we don't have to recover so much to hit the average price and to be profitable again. And this is because we increased the lot size. So this is the idea of Martingale and grid strategies. And here we kind of use both because we increase the lot size if we're losing and we build this kind of grid. This means that it will be easier for the market to recover the losses and to be profitable again for this series of trades. Of course, this also comes at a risk, and we will have a look at this later on. But first of all, let's have a look at some more trades. Here and that is what we can see here. I made the settings so that we will use a trailing stop at starting from the point where we're at 200 points minimum above the break-even price. So here you can see the trade is more than 200 points in profit, so the trading stop will trail at a distance of 100 points. So we can make some more profits if the price is going up, like we see here. So this is the idea of the trailing stop. But we have other options. So let's have a look at the inputs here. So you can see we don't only have the trailing stop in TSL points and TSL trigger points. We can also turn the trailing stop off and instead use a fixed TP of, let's say, I don't know, 100 points. I mean, you can choose 100, 200, whatever you like. That's why it is a input parameter. Also, we could change the starting lot size and the martingale point. So maybe let's just choose 500. This will create a lot more trades because the grid distance for the trades is smaller. And yeah, we can also go ahead and change the martingale factor. So we could choose 1.5 only instead of the 2.0. So we don't have to double every single time, because in this case we choose a smaller grid. So maybe we also want to decrease the martingale factor. Also, we can of course change the order comment, the magic number. This doesn't really affect the program. Then we can decide if we want to use the indicator signal for the martingale trades. We could just go with the grid right away. So every 500 points, there's another trade. But we could also choose to apply this entry signal with the 2 indicators for every trade. Also, of course, we can change the periods of these moving averages, maybe to 20 and to 100. So if we give this another go, we will see the program is of course the same, but since we changed the inputs quite a bit, the outcome will be quite different. So now you can see that we will have this 100 period moving average and this 20 period moving average, which means that I think we will see more crossovers. So let's wait for the first one. There's the first one. We have one sell signal, and now as we chose in the settings, we now have a fixed TP of 100 points. Also, if we get another sell position here, we don't get another sell position because this one was a profitable trade. But here we see a buy trade, okay, also a profit. Let's wait for some martingale trades here. All of these trades are hitting the profits so far, which is not good for my demonstration here. Okay, maybe here we can see a martingale trade. So yeah, you can see now we had the first buy trade here, and then we had a second buy trade here. This time we only needed 500 points, not 1000 points. This is why we have the next buy trade here. Then the next buy trade has 1.5 lots, not 2 lots. This is because I also changed this. Also in the upper left corner, you will also always see the break-even price of these positions. The buy positions have their break-even price at 1.09504. 0.9504. So it's somewhere here, and you can see 100 points above this break-even level, we see the take profit. So this is how the TP works if you are not using the trailing stop. So we just have the TP for both positions at this level, and if we get another buy position, you can see this is always modified. So we always see that the TP changes when we get more position. And yeah, this is the overall idea of these martingale strategies, that even if you get like 3 buy positions that we see here right now, even if we get 3 buy positions, we still have the chance that the price recovers, and because of the big lot size, it doesn't have to recover so much, and then we can close all of these trades in profit. And the general thought is that markets, they might go into one direction for a while, but usually after a while, like after multiple hours, multiple days, or even some weeks, it should go back to some kind of retracement level, or it should come back for some retracement movement. And here, that's what we saw here. So the buy trades were closed, and all of these buy trades should have generated a profit here. Yeah. We are still in the equity negative because we have the sell positions, but these positions will also be closed at some point, I think, if they hit the TP level. Yeah, here's what we can see. We have a really long period where it's going, where we have a strong long trend, but in the end, at some point, you usually see a reversal, and then it's most likely to hit the TP, and then of course you can cover all the losses. But yeah, of course, this is a risk that you have, that you will see such a long trend that your account is not big enough to offer the margin for more trades, and that's when you might have this worst case scenario where you blow the account. So you have to do a lot of optimization and testing, and have to figure out what specific settings you want to use, what risk do you want to take when you trade such a strategy. And it is a risky strategy, but on the other hand, and you can see this here in the graph, you also have a lot of performance potential. So usually you will see a really good performance of your balance curve, and even if the equity is below the balance curve for quite some time, often you should see a steady increase in the balance curve. And you just have to figure out for yourself, is it worth taking this risk for you? At some point you might see something like this. And again, it depends on the settings, on the period that you trade this EA in. For example, the last test that I made, it didn't have this scenario. So a lot of different factors come into play here. But the good thing is, if you check out the link below this video, you will find my website where you can have a closer look at this course here. In this course, you do not learn you don't only get a finished product, but you learn how to write the program. So you learn all the programming basics, you learn how to write this specific program, and also I will add another program. So you get knowledge, which is more important than just buying some random product in the internet. And then you can apply or build your own Martingale and grid systems, or maybe apply this mechanic to your own programs. Also, we can choose to not have a TP in points, but we choose to have a TP in a fixed fixed amount of money. So let me change the settings here a bit, and here you can see that now I want to make 100 euro with every series of trades. So if we have a look at the history here, you can see the profit of these trades is usually 100 or slightly above. And if we see multiple trades, they should, wait, let's have a look where we see two trades. Yeah, you can see here we see two trades. One is a loss of 1022 and the other one covers the losses and also generates the 100 euro profit. So you can see there are a lot of different inputs that you can play around with. And yeah, that's the idea of this strategy. Also, if you learn how to write these programs, you can of course exchange the moving average signal, use any other signal that you like, because that's the good thing. Once you understood how something works, you can try out so many different things. And that's the big advantage that you have when you really learn something, like writing these automated trading strategies, compared to just buying one finished product in the internet, like for example on MQL5, where you just get one product, and if it crashes, you pretty much have nothing. You don't have the product, or you don't want to use the product anymore. Probably you don't understand how it works, why it crashes, etc., etc. So it's more important to invest in your own knowledge. Yeah, I always want to say, like, take responsibility for your own money, for your own trading career. Don't trust some random trading guru in the internet. Because in the long run, this will give you so much more compared to just buying some random program. Okay, so this is it. This is how the strategy works. Maybe you can build a similar strategy. Maybe you want to check out the course. This is just an inspiration again. Make sure that if you work with Martingale strategies, be aware that there's always a big risk trading these strategies, but I mean, yeah, you can see it. You can win a lot, you can lose a lot. It's personal preference. Like, it depends on your personal risk feeling. What are you willing to risk? Do you have money that you can risk which with such a high risk strategy, or is it nothing for you? Everything is fine. I just want to be want to give you the tools that you need to make these decisions for yourself. So anyways, thanks for watching. Have a great time, and I hope that I will see you in the membership area learning how to develop, write and code and use Martingale and grid trading strategies. So thanks for watching. Have a great time. Good trades. Bye bye.